Welcome to Technical Market Insights, ladies and gentlemen, where we are going to go over all the major ETFs as far as what's going on in the stock charts, what we expect, what we've seen. We're going to go over some of the biggest gainers and biggest losers of the day, and we're going to do a quick scan and see if there's any buying opportunities out there. If you ain't subscribed, make sure you hit subscribe. There's something here for everybody, and leave me your feedback. Feedback's very important to help me to just get the content to what you're looking for. So let's dig in. Now, if you've been paying attention the last couple days, especially yesterday, something I'm going to try not to keep doing, and that's saying we called that yesterday. We called that yesterday because that seems to what keeps happening. So let's take a look at SPY. We called a pullback yesterday. See the commentary for 10-12. Happy Friday, by the way, so we're going to keep this quick. So we started the pullback actually Wednesday. As soon as it hit overbought territory. Now SPY did not think that was actually going to hit that trend line. Eventually it will, or it's going to set even lower highs and lower lows. But as you can see, it hit the overbought territory yesterday. Expected a pullback, and I expect a pullback into the oversold territory. It's just how swings work. And if you follow the channel, if you've seen any previous videos, you'll know why. I'm going to get to more educational videos about everything I have set up here. That way you understand my chart setup. Those might be beginners, not even know what a candlestick really looks like. Never really seen a chart like this. There's plenty of people out there who just look at line charts, stuff like that. If you're watching this channel, I want to shoot some educational videos. I'm going to try to shoot one a week, starting with this weekend, and it's going to be straight to the basics. So we expected a pullback in SPY. We've expected pullbacks in the entire market. Since if you look at the monthly, I'm going to say a couple months ago, especially starting in SMH. This is the semiconductor ETF. It's one thing I noticed. I've been saying these ETF tickers and ain't been explaining. This is a semiconductor ETF. Usually it gives, maybe it's because I'm in the monthly chart. Okay, well, sometimes TC2000 glitches like that. It usually will give me everything in that ETF. That basket of stocks says ETF exchange traded fund, and this basically holds a bunch of semiconductor companies. So as you can see, I want to say the beginning of this week, I explained I expected to hit this channel. Actually, it happened a lot quicker than I anticipated, and then I expect to pull back down to the bottom of the channel, and we expected the weekly chart to bounce. So this is the daily chart. This is the weekly chart. Now all the major ETFs, from DIA to Dow Jones, which we'll get to that in a minute because that crossed under the 200-day moving average. But Triple Q's is a technology ETF, which isn't just all semiconductors. It's everything from Tesla. Let's see if it. There we go. So actually, TC2000 actually pulled up everything in here. And you can just kind of go through these and just see what it's holding. I do really like that company, but just so I don't jump out of what we were talking about, the weekly chart on SPY, all these ETFs, we expected a pullback. It hit the oversold condition, so we expect the weekly to bounce. So I've been saying I've expected a green October on the monthly chart. Right now it's green. Now just because I say a green October don't mean it's going to be a big green bar. It could be one of these bars which barely beat the last month. All right, so, and honestly, how quickly the daily retracted. And if you look at the weekly, it may not bounce that hard. If SMH already hit the trend line and retreated, I thought that might actually took another week. but it didn't. So if these weekly charts retract, and with everything going on around the world, monthly chart may continue down quicker than anticipated, and the weekly bounce may not really happen that well. One thing is for certain, these markets are not anything that's enticing to me, considering it's trending down. It's setting lower highs. As far as this high is higher than this high. Usually you want the highs to be higher than the previous high. That's a bullish chart. So as you can see, the highs are getting lower, the lows are getting lower. It's just basics, right? Like keeping things simple, like sticking to the basics. As you can see, my chart, once you learn about charts, isn't overly complicated. There's charts I see some people post that personally I couldn't look at. I've tried every technical indicator out there, every channel. I've been doing this come this November 23 years. So I'd like to say I've learned a thing or two that hopefully you guys can catch on to. So overall market, we still have the same outlook on. We believe the monthly charts need to pull back. Believe an SMH will hit this 20 bar moving average, just because you do not see it get oversold too often. Now, it got oversold in COVID, almost hit it right here in end of 2018, 2019, and then you got to go back all the way to 08, 09. As you can see, they kind of bounce right around here. So I think by the time it gets to the 65, 59-ish stochastics, I think we could see this pull back another 12%, which I know nobody likes to hear, but it's just what the charts are telling me. So don't want to be the bearer of bad news, but it's definitely nothing I'm holding. So triple Q, I'm expecting the same thing, right? We're going to pull back on the daily, and the daily charts are going to trend down, weekly, monthly charts, until we get a nice healthy pullback. So we could be trading these right here, right? We could be buying when it's oversold, averaging down, and getting these runs. And when I do that, I use leveraged ETFs. So that's over here. So for triple Q, right, let's say we got an average right here on the pullback. We could have had 11% in 10 days, but the way these are trending, I'm not a fan. The way the monthly chart looks, I'm not a fan. The way the weekly chart looks, I'm not a fan. Over the years, I've learned to be very patient, stack cash, put it to work when the opportunity is right. Now DIA, this is one, cannot seem to break and hold above the 200-day moving average. We were watching this when it was oversold here. Seemed that if it held the 200-day moving average. I was really hoping it held the 200-day moving average, but it did not. As soon as it broke under that, it dropped even lower. If you know me, it's under the 200-day moving average, we stay away. Now it did close green today, I think just by the luck of the banks. If you look, United Health actually, I had a pretty good run. Let's see what else ran and down. I know the banks had a good solid move today. I don't know why this is so hard to move, but Travelers Company, I don't care about. Once again, I couldn't hold the 200-day moving average. Simple rule of mine could save you a lot of losses. Oil obviously rallied, so you had CVX rally a little bit, and then you had JP Morgan. As I figured, I seen it early in the morning. I didn't pay attention at the end of the day. Banks faded quickly, so you had these up as much as 5%, and it only closed up 1.5%. Guys, be careful on these market buying, these pops. They don't seem to last. P&G, but so yeah, I mean the Dow Jones didn't really do much, and I'm not really impressed as far as the overall market goes. So once again, we're staying patient. If we trade anything, even single stocks, we're waiting for the overall market to hit the oversold condition. And then we're going to be watching the overall market in every stock we buy to see if it holds the 200-day moving average. So real quick, let's look at the And guys, the more you listen, sometimes I feel like I'm saying the same thing I said yesterday and just watching it play out. But the more you hear this, the more you see this, the more confident you're going to be, and the more you're going to understand it. Right? So keep listening, keep paying attention. It took me, let's say, 15 years of spinning my wheels in the market. I think I wrote my first book about 6 years ago. 17 years of stock trading, what worked and what didn't. I've tried everything. I'm telling you, this is the most simplest, most effective method to compound your profits, beat the market, and build wealth. So that's enough for the overall market. Let's just see what happened as far as the biggest gainers and biggest losers. Once again, if I had to guess how much you want to bet, they're all biotech. Look at the volume. The volume ain't even worth looking at. No, it's not bad. So once again, this is an information technology company. But man, look at this. Jeez Pete's. Across the 200-day moving average, you're down about 90% if you bought back then and didn't sell when it crossed the 200-day. So if you had 10 grand, you still got about 1,000 of it. So this little pop, I don't think really means nothing to you. But let's see here. I mean, this thing looks like a pump and dump multiple times. Guys, I'm doing this, and I don't want to trash anybody. If you're trading these kind of stocks, I just hope you're making money. If not, if I say this stock is trash and you own it, don't take it personal. It's not personal. But look at the chart, right? I want us to be in the same team on making money, and I want to educate you so you don't make the same mistakes I made 10, 15 years ago, 20 years ago. All right, these right here are just straight pump. I mean, this thing was up, so it's up 145%. So if we go all the way to the top, I mean, right. Oh, looking at the wrong spot. It was up as much as 234%. So that means people were buying this up 234%. They could have looked at the chart and seen the same thing that happened back here if they would have bought. So these people that bought up that high, they're down 70%. They put 10 grand in it, they're down to 3. They put 1,000, they're down to 300. Guys, buying stocks like this is an easy way to burn through your money. Buying stocks under the 200-day moving average, even good companies, is an easy way to burn through your money. This is all for educational purposes and just my opinion, but I'm sticking to it. Biopath, here we go, healthcare technology company. Once again, barely crossed and held the 200-day moving average there, but as soon as it crossed down, I mean, you're another 90%. I mean, people's just getting their portfolios taken out. So, I mean, if you bought after this huge dump, I mean, geez, Pete's. You're talking about a 22% loss there, 50% loss there. I mean, people just got hammered. But guess what? It popped 90% today, and that's probably got a lot of people excited. A lot of people probably bought this at $1, lost 25% like that, and hoping it goes back up. Guys, there are way better companies you could be putting your money in than companies like this. This is a gamble. This is a dream, a get rich quick, hoping to turn a few bucks into a large profit. That's what I spun my wheels for 15 years doing, until finally, on my knowledge of studying charts, looking at the market, became wisdom, and I stopped doing things that weren't profitable. Yeah, you might make some moves like this, but I guarantee there was times I made 200 or 300% gains back to back to back, and then my dumb butt would lose 80%. So it don't matter if you turn 5 into 10 by making 100%, then you lose 80%, you're back down to 2. Doesn't matter. Look at one more of these. Yeah, I mean, all of these are, well, I mean, this is one that's actually, gee, unless you bought back here, been about even for 2.5 years. And then it pops up today, 91%. Let's check the news on it real quick. Let's see what happened. So yeah, somebody bought it out. So if you had patience in this for 2.5 years, or bought, maybe there was some rumor here, 90% on a buyout. But guys, actually getting in those versus the ones that drop like a rock, it's very rare to get into those compared to the ones that lose. But whoever made money on that, congratulations. Killed it on a 90% gain. I'm sure whoever sold the day before is salty. Got this right here. Guys, I don't like anything that hasn't established a 200-day moving average. You can see this stock's pretty new. Let's look at the biggest losers. Again, 100% loss. Wow. So this went straight to zero. That's crazy. That's what happens when you play with penny stocks. Look like it got pumped up here. 630% gain there. So people were buying that up. Man, I'm sorry for your losses. Guys, I'm doing this just for examples and a learning, educational purposes. I mean, that was one heck of a ride right there. And then that ride came to an end. It looks like it continues coming to an end. Yeah, another buy. That's it. So let's go into the ICAP 1000. Those are the stocks I like to look at. These are the ones we're going to be in. Real companies making money. There are some in here that have 0 P. They're not making any money. I won't even trade them because I look at the chart, see if it matches my buying criteria. If it does, then I look at the fundamentals. Right? I look at the PE, make sure they're making money. If something would happen, I get stuck in a company for 10 years, let's say the market closes like Warren Buffett says, hopefully you've read The Intelligent Investor as well. I want to make sure it's a company that's making money and paying a dividend. Stock market opens back up, your money should be okay. It's a theoretical situation, but you get my point. I don't want to own a company that ain't making money, speculative, all that bull crap. So here, this is an oil and gas company, which has been killing it. By the way, we missed going over oil when I said the overall market. Oil we've been talking about for the last week as well. Check the previous videos. I got oversold here, which I've said I probably would have waited to hit the bottom Bollinger Band just because there was a big gap there. Usually I like when it's oversold, it hits the bottom Bollinger Band. Right? I know people that just trade just on the bottom Bollinger Band alone. I actually used to, and then I added in my stochastics and kind of put them together. But let's say you bought there because it was oversold, and we teach to keep enough cash on hand to lower your average. So usually probably go 20% to 30%. So you should have been able to add 2 to 4 more times in this. So you got your average here. Right now you should be up 5%, but it is an ETF, so we would have been in a leverage version, so you'd probably be up 10 to 15%. As a matter of fact, I came out with a short video saying I'd be buying it up right there after that drop if I already bought that. I usually don't touch them until a day or two after a gap down, just because gap downs carry momentum, and all this is stuff we'll go over in some more educational videos. But also yesterday, I said I could see oil breaking this high, or at least touching it here soon with everything going on and it coming out of the oversold territory. And then bam, we popped 5% today. That's a rundown on oil. So I don't see that. That's actually your most bullish sector in the entire market. You look at the chart, it's your most bullish sector in the entire market. So that's one of your biggest movers today. Moved, I'm sure, on oil. I'm sure that move was on oil, Marathon. Now see, this is what I'm saying. Sometimes you'll see them drop under the 200-day moving average, and they'll bounce back up. But also, I'll show you my latest example, the one I exited under the 200-day moving average, Raytheon. I had this in my long-term account, bought it ex-dividend right here, so I got the dividend. It dropped under the 200. I sold, still got my dividend later. And, you know, I had everybody dogging me, oh, you say you shouldn't sell. They got up this high. People's like, oh, how you feel now? It was a big percentage gain. And I moved my money in BWXT, which is up like 30% since then. But look at it, it couldn't hold the 200 day. It tried, broke back down. So I saved myself 25% loss and put my money in a bullish chart, BWXT. I want to say that was right around this time frame. I bought like crazy every dip once it hit that area right there. Yeah, oversold right there. And that position was every dip. I meant every day after that dip. This is a company I'm got all my custodial accounts, plan on holding for a while. Check out Trezo Fuel, Project Peel, just nuclear energy as a whole. And that was up 23% that buy. Been buying this stock since January and telling people it's a buy. So that's a 50% swing. So that's the difference on a 10 grand account of 5 grand. So I'm not mad at myself. Every once in a while, what stock was that? Every once in a while, you'll see that. But that wasn't a bullish chart to get in anyway. I mean, look at that. MPC, I actually alert. Let's see what that is. Yeah, when oil pulled back, that was when I said I'd buy. I'm surprised I ain't rallied more than 5%, but I mean, you want to look at the bullish charts. Let's go back and look at MPC to see how that chart looks. You see how that chart looks more bullish than MRO? So this would be a chart I'd be buying on pullbacks. All right, look at a few of these and hopefully you guys enjoy your Friday. So this one right here, look at that. One of the biggest losers is it's overbought, ladies and gentlemen. Time to take profits. We bought that there, locked in profits. Listen, if you don't take it, that was a 15% gain right there. I missed that. Yeah, 15% gain in 16 days. It's a nice gain. But if you don't lock in your profits, somebody else will. Take your profits. I mean, unless you're just dollar cost averaging and holding for 10 years. XPO, trucking company. See, these are the swings. These are the charts I like. Oversold, overbought, 15% in 7 days. Lock it in, let it pull back, rinse and repeat. Once again, I mean, this is like clockwork. Like clockwork. Let's see this one. And I really like that chart. Another 16%. And all these took place when the overall market was overbought. So SPY might have got 3% out of that. On the leverage version, you might have got 9%. But those other stocks, you've seen 15, 16% gain. Those are what I look for when I scan. This is already filtered, so let's see if anything's oversold. Nothing's oversold. Let me see. So right now, I do got a few ETFs oversold. Uranium miners. So that might be a trading opportunity in uranium miners. Bullish chart. Oversold. If it goes back up to the previous highs, you're looking at 15%. And that's probably another uranium. Yeah, so you got 2 uranium ETFs, oversold, bullish charts. Might give you a 15% run. These are all the bullish ETFs right now, so everything I'm clicking is coming up in my bullish scan. Looks like oil, uranium. Oil. So guys, this is the way to find bullish positions, to put your money to work and strategically find the proper time to buy. Now, you may not time the market to perfectly low, but that's why we keep money to average lower. Guys, it's really simple. And I wrote 2 books called Simplified Profits. It's so simple. Like, it's anybody can do it. Hopefully, hopefully you guys pay attention. I'm going to do some educational videos and just break it down so it's even simpler. If you want to study that out over the weekend, go to Amazon, look up Simplified Profits. You'll see Anthony Calhoun. That's my name. That's me, your host of the show. And there's 2 different editions. One's how I handle my long-term account. One's how I handle my trading account. They're sitting over my bookcase, or so I go get them. But You can find them on there. Actually, you can probably see it over in the little screen over here, a little picture of it. Don't have to buy it. You can pay attention on here, but it's very organized in detail. Everything I go over on here. And I don't think there's really anything else I'm missing on here besides you guys have a good weekend. If you ain't subscribed yet, I don't know why, because you'll end up killing it. It's all for educational purposes, though, a little disclaimer. And I think here coming in the new year, I'm going to start an account, fund it with about $2K. I usually put up about 20% of my income. I'm going to put 10% into that portfolio and see how we can grow that portfolio over that year. How many losses we actually take, which will probably be, I'm not trying to get ahead of myself, but subscribe, hit like, leave your feedback, and share. And I'm out. You guys enjoy your Friday.